Monday, November 10th, market analysis. Stan Ehrlich. I start out with stock indexes, go to futures, and some stocks. So this is not really good enough for me. This rally is substantial. It's up about 11 points on the Spider SPY, my base index. And of course, that means the MES and the ES, of course. This is the MES or the ES, same thing. All we've done is pop back up into, I don't know, 50% retracement area toward resistance. I've got to have a lot more follow through to the upside. I know the reason why the rally, everybody does. I just is still expecting lower levels, maybe by the end of the week, lower than Friday's lows. And that's exactly what I said on Friday. And I did say that the market could pop back up again because of the strong close on Friday. Obviously, the expectation of a settlement, so to speak, was coming out during market hours on Friday, leaking out, so to speak, or being expected. And here is the 5-minute chart, MES. Just coming up to, generally speaking, resistance area. Spider did gap up today. Gaps are almost always closed. Therefore, at a minimum, I'm expecting to move back down to the high of Friday. Not much higher than today's highs. RSIs are pretty much neutral across the board for the daily data charts. 5-minute chart on the Spider, gapped up in a general area of resistance. There's nothing really specific, frankly, about the rally highs we see late in the day when the market started to stall out a little. Next, we've gapped up, of course, also on the QQQ, up to resistance areas. There is another gap higher for the Qs and only the Qs, and that's going to be up to the gap closure, which would be 629.85. Watch that price or very close to that price for the market to turn back down if it can get there to begin with. Next, 5-minute QQQ. There's the gap closure right there. Oh, I'm sorry, right there, the low of that day. Yep, there it is. So NQ, 23-hour market, no gap to close, just a bounce back like the MES. Next, MNQ. Don't trust this rally in a general sense across the board. YM, same thing. Coming up, I'm not overly impressed with the strength. I was expecting some, not quite this much, but it doesn't change the bigger picture. 5-minute chart. A little resistance level stopped it, not that significant. And we're looking at the Russell. Maybe a tiny gap, not that important. The Russell stuck again between a major support and resistance level. Support 2305, resistance, two different highs. One we saw was on October 15th and then slightly higher, October 27th. Almost broke out to the downside on Friday. Today's rally, not particularly meaningful. Maybe we'll come back up to the bottom of the old channel. And the 5-minute chart. Bonds tested support last week, closed a little lower. As I've been talking about for a couple of weeks now, I'm expecting it to test and maybe break below 115.24. So we're getting closer and closer. If we close below 115.24, we have another leg down probably. Notes. Testing a bull trend line last week and oversold. Bounced a little bit, coming down again. But this support zone, except for last Wednesday and Thursday, it didn't hold, but the trend line did. The two are converging soon, maybe at the end of the week. I'm still expecting the support to be tested, broken, and drop off below the trend line. Mm, Probably the next move down 111 and a half. Crude oil, firm close, now up against resistance. It broke below it for 3 days last week, making new lows, a couple of them. This bounce is not important. I think it's going to stop basically right here. I don't expect it to get to the top of the resistance area at 61.40 or to break out above other important levels above the market. The most 61.45, but I think it could turn down any moment. Natural gas popped in a new high ground above resistance, but couldn't stay there. Closed back down below the top of the resistance level I've got on my screen. And let's reformat a little so we can get a little better resolution. And close below the previous rally highs of Thursday and Friday. I think this is a high day. I'm expecting it to turn back down to challenge the lows of the range in September and October. Heating oil. Friday popped up again above resistance, but couldn't stay. Closed lower on the day and well below the resistance line. Today it bumped against the resistance line again, just like Thursday last week, and closed up a little bit higher, not much. I think it's topping out. I expect to see a break. Gold had a very strong day. This is a new high and a new high close near the highs for the first time in a couple of weeks. Now, we're not overbought yet. I think we're going to see a little bit more strength. Not quite sure here. Maybe up to 42.20 and maybe up to 4,300. Best I can say. Silver, similar. New high close for the last 2-3 weeks. Probably a little upside follow through. We did get the top of the market in silver for a fairly decent break. It wasn't super good, but it's not over yet. If this opens lower and keeps going straight down, that kind of changes the story. But I do think we'll see a little bit more strength for a few days. That's the best I can come up with on gold and silver at the moment. Platinum, not quite the same. Minor new high for only a week or less and close. Not above the highest high for the last 2 to 3 weeks. Less strength, less follow through, easier to roll over and make new lows probably. Between a rock and a hard spot, no comment. Next, copper popped up a bit more than I would expected. Still doesn't change my opinion. Still looking for a test of recent support in the last month or two, and then probably down to the lowest low we saw back in late July, early August. Soybeans and the grains. Soybeans came popping back up dramatically a bit on Friday and again significantly today. Great. You know, I've been trying to justify a major long-term bottom in grain for months and months, several months. So we've got it. We've got new high closes. We've got a test of support. And now it looks like we're about to make another new high in soybeans. Now, how high is up? Take the vertical height of the trading range in a general sense because it's not very exact here. This method is similar to what you would use in a double or triple bottom situation. And you go from, I'll just round it up a little bit, 1,000 up to a fairly clear 1120. And that would be another 130, 120 higher. Yeah, 1260. Is that important? Well, 1160 is. 1260, I don't know. We'll look later. It's a long time from now. Next, soybean oil finally broke out of the major bear trend lines. This is good news for bean oil. New high close for a week and a half, 2 weeks. I was hoping this would happen today. I was talking about it on, well, last week. We picked the bottom of the market to the exact day. Green bullish engulfing ER buy signal. Looking good. expecting a move up at a very bare minimum, 51.77, and probably substantially higher than that. Soybean meal coming up off of a test of support on Thursday and Friday, still in the resistance, support and resistance area, expecting a challenge of recent highs of 525 and higher. Corn has an outside up day. If it was oversold also, I would have gotten a green bullish engulfing ER buy signal like we did at the bottom of the market August 14th. This bearish red signal on October 30th, I said at the time, I didn't want it to work. I hoped it wouldn't. I hope the neckline on this head and shoulder bottom, which is not a very good example of a head and shoulder, it's got a double shoulder on the right and only a single on the left, no symmetry. The timing is a little late on the last double shoulder, lack of symmetry, but the body parts are there. The neckline has been crossed. Only one day, Friday, did it close a little below the neckline and pop back up above it today with the bullish engulfing. I think we're on our way back up. So that's a little anomaly or a rarity that we went below the neckline and didn't keep going down. Sometimes you get these little traps. Next, wheat, doji, strong close, back in a support area. Even though there's a gap to close down here at 515 and a half. I'm a little skeptical that it's going to get closed. I'd love to see a new high for the trend up here for the last couple, 3 months, and that's what I expect very soon. Close the gap or no close the gap. Apple, and we're not talking a vegetable. So sideways. Actually, very unresponsive to today's big rally up and the indexes. Some gaps to close below. Closest one, 264 and a quarter. Next lower gap, 253 and a half. Then you're dropping off to major support starting at 241. Next, Tesla popped up a bit, nothing super dramatic. Going sideways with a possible double top here for now, basically 2 months. Gap to close at lower levels. I should be pulling this to the right. Like so, that's good. And this one as well, do it later. So I'm looking for a move down to 397 and a quarter or lower. Next, NVIDIA, gapped up, new gap, marker going in, right there to right there and to the right. Good. Also, support down here. Still looking for a move down to 173 and a quarter, as I've been talking about for a while. No change of opinion. I think it's going to turn down. AMD, gap to close also. Put a little gap marker in there. Little good. Similar to support and resistance. In some respects, they act similar. This has a huge gap to go all the way down to 170 and three quarters. Still think it's stopping out. No change. You guys have a great day and profitable trading to you.